This week for Nvidia, a major strategy shift in Asia raises questions about its global balancing act, even as Wall Street analysts grow more bullish. The company's stock has been surprisingly stagnant despite a wave of positive news. Is this a temporary pause before the next climb, or a signal of growing headwinds? Welcome to TickerWatch News for Nvidia, Week 10, 2026. This is the weekly report covering the news and developments for Nvidia, tracking the key stories and market reactions that are shaping its narrative. Looking at the first week of March, Nvidia's stock performance didn't align with its string of bullish headlines. The stock ended the week around $178 and is down nearly 5% year-to-date as of March 6th. This comes in a period where the broader S&P 500 index was down just over 1%. The lack of upward movement, even with strong earnings and analyst upgrades, suggests investors are weighing significant long-term opportunities against near-term uncertainties. Top news and headlines. Several major stories defined the week for Nvidia, highlighting a pivot in strategy and a deepening of its ecosystem partnerships. First, reports emerged that Nvidia has stopped producing its advanced H200 artificial intelligence chips intended for the Chinese market. The company has apparently reallocated manufacturing capacity at its chip-making partner, TSMC, towards its next-generation Vera Rubin hardware. This move follows ongoing uncertainty around U.S. export approvals and suggests the company may not expect significant sales from these specific chips in China in the near term. This comes after Nvidia's CFO noted that China represented about 9% of revenue in fiscal 2026, a substantial drop from around 20% in fiscal 2024. Second, Nvidia is making a major push into the networking and optics that connect its powerful processors. The company committed a combined $4 billion to optics specialists Lumentum and Coherent. The goal is to advance the optical technologies needed for next-generation AI data centers, addressing potential data bottlenecks in large-scale systems. This move signals Nvidia is focused on the entire AI infrastructure stack, not just the computing chips. Finally, the company continues to embed its technology across the industry through new partnerships. It's working with Cisco on Australia's first secure AI factory to support sovereign AI development. A collaboration with Texas Instruments is focused on new sensor technology for humanoid robots. And Meta Platforms has reportedly engaged Nvidia to help it lease a massive data center expansion in Texas, a site previously tied to Oracle and OpenAI. Market reaction in investor sentiment. Despite the stock's sluggish performance, analyst sentiment turned increasingly positive this week. Morgan Stanley reinstated Nvidia as its top semiconductor pick, noting that the business has continued to strengthen while the stock has remained flat. The firm sees the current valuation as an appealing entry point. Wedbush analyst Matt Bryson also expressed confidence, raising his price target from $230 to $300, citing the ongoing surge in demand for accelerated computing. Other major banks hold similarly bullish price targets, with Bank of America and Bernstein at $300 and JP Morgan at $265. However, the overall market narrative remains mixed. While the fundamentals are strong, some investors are concerned about the sustainability of the current aggressive spending by hyperscale cloud companies. There are also concerns about Nvidia's deep association with the OpenAI complex, where any skepticism about OpenAI's spending pace can indirectly affect Nvidia's valuation. Technical and fundamental check-in. From a fundamental perspective, Nvidia's position appears strong. The company's fiscal year 2026 revenue was nearly $216 billion, a 65% increase year over year, with free cash flow hitting almost $97 billion. First quarter guidance for fiscal 2027 is projected at around $78 billion, with gross margins holding near 75%. The stock's valuation is a key point of discussion. Based on some analyst estimates for next year's earnings per share, Nvidia is trading at a multiple below market averages, which some view as a surprisingly low for a company exhibiting such dramatic growth. Morgan Stanley noted the stock trades at around 18 times its expected 2027 earnings per share. What to watch next week? Looking ahead, a major catalyst is just around the corner. Nvidia's annual GTC conference begins on March 16th. Investors will be watching closely for new product announcements and updates to the company's roadmap, which could lead Wall Street to revise its growth models. The bull case scenario is that announcements from the conference, particularly around the next generation of products, will reinforce the company's dominance and re-accelerate the stock's performance. The bear case centers on the idea that current growth is unsustainable, competition will intensify, and that U.S. export restrictions on China will become a more significant headwind. Investors will be monitoring whether the stock can break out of its recent trading range following the event. Thank you for tuning in to this week's update. The information in this podcast is for educational purposes only and is not financial advice. We encourage you to subscribe and share this episode. Join us again next week for another edition of TickerWatch.